Morning, this is Pat Walker. You must think I'm going crazy with these videos, and I guess I am, but hey, I'm having fun, and I hope it's helping you. My goal is to help you. Like I said, I started doing this in '86, and you know, folks, I got to tell you, I didn't have anybody teaching me this stuff, and the brokerages, they didn't really care. They were just after the money, the commissions. They didn't really have an interest in, oh, wow, let's do some research and help people. It's, here's the commission. And I had to figure this out. This was just very important to me. It's a passion of mine. So we're going to go through a situation here. Everybody always talks about, oh man, this was a great one. This was a great one. This was a great one. Well, let's talk about one that wasn't. This is a loser. Let's go through it. All righty? So here we go. We're looking at Facebook. And we're going back, and it's this date, 12/29, right at the end of the year. And I'm looking at this. It's on the 50-day, just a little bit below the 50-day. It's a max list stock. There's a line right here, a little shelf right here. There's a higher one up here. And I say, gosh, if it takes out this shelf right here, that could maybe be bought. Bouncing off the 50-day into the year. So let's play this out, okay? And by the way, we live in the now. We don't know the future, so we live in the now. That's the way to do it. By the way, I encourage you, do that yourself. Slide the chart back to the beginning of the move so you know how you feel. The biggest part of this game is the emotions. The emotions. It's what's between our ears. So it's important that we analyze critically our emotions. So here's this little shelf right here, and we'll see maybe it'll take that out. I don't know if it will or not. We're watching it. Oh, it does. Right here, first day of the year, the market's exploding, everything's great. Takes off those highs, does it on a pickup in volume. That's nice. So you pick some up. Bouncing off the 50-day. Where's it going to go? You don't know. Hopefully it'll keep on going. And again, put it in the context. The market was flying at the first of the year. So here's this one. So now we move on. Here we go. Next day. Oh, it goes higher. Let's do the happy dance. Gaps up, closes near its highs. Takes out this little shelf right here. Buy a little bit more. Now this is also an important lesson. Let's suppose that you bought 100 shares here and it goes up. Don't buy another 100 shares. When you pyramid properly. If your goal was to get to 200 shares, if you bought 100 here, this next trade, you buy 60. 60. So you've got 160. If it keeps on going, you could buy more. So you're happy. Here we go. Let's see what happens. Gaps up, reverses down. Didn't close the best, so you don't add any more to it. You've got your 160. All right? And we'll see what happens here. Next day goes higher. On less volume. You could add to it if you want, but it wasn't an explosive lift. So you sit with what you got. You don't add. So that's where you're at. Everything's great. You could even, if you wanted to, sell a little bit into strength. You own it down here. You're up about 7 points. You could sell a little bit if you want to. Or you just see what happens, okay? Looks fine, though. No problems. Goes higher. Okay, looking great. I don't have a problem with it. The market's strong. Volume's picking up. You could sell a little bit into strength if you want, or you could hang on and see what happens. Everything looks fine. Inside day, very constructive. No reason to panic. Did it on less volume. We study price. We study volume. Quiet inside day on less volume. Now, let's suppose this volume was really heavy. That would have been a catalyst to maybe sell a little bit more. But it's okay. There's no problem. The next day, gaps down. Comes down near the 8-day, but closes near the highs of the day. Did it on low volume, but it's still okay. There's no problem. Gaps up, closes down, just a hair, but it's above the rising 8-day. No volume. By the way, don't micromanage these trades. Don't be looking at 5-minute charts and in and out and all that other crud. If I looked at a bunch of 5-minute charts, you and I wouldn't be talking because I'd probably be dead. So we just kind of micromanage it. I used to sit there and have daily and 5-minute charts side by side. And I'm going to tell you all something. I constantly got shaken out of stuff. So I got rid of the 5-minute charts. I'll look at here at the daily charts. Periodically, I go to different time frames to manage it. So here we are. We're okay. It's walking up the 8-day. Everything's fine. Boom. This happened on Friday. News with Zuckerberg. Stock gaps down huge. That's a big gap down, folks. Gapping down below the 50-day. Okay, and it's like, that could be a problem. You can say, oh, it'll probably bounce back. I don't know the future. I get in line with what is. This is a big gap down on heavy volume. When this happened, and I owned this, okay? When this happened, you can say, well, what did you do then? Here's what good traders do. And I'm not going to say me. I'm talking about other people that I've learned from. Watch the first 10-minute or hourly or 30-minute bar. So here is Facebook. Let's take it down to 10 minutes. Here's the first 10-minute bar. It gapped down, but look at where it closed. It closed near its highs. And I told the VIP members, let's just watch this and see what happens for a little bit, okay? That's the 10-minute chart. Here's the 30-minute or the hourly chart. It gapped down, but it closed near its highs on heavy volume. So there was some support here. Here's the 30-minute chart. It gaps down and closes at its highs on that bar. So now we've got a frame of reference here to watch. This is the next 30-minute bar. And you can say, okay, now I've got an idea. It gapped down and closed near its highs on heavy volume. So there was some buy-in in there. Then it goes up a bit and closes down a bit. Heavy volume, but less volume than this bar. Let's watch it and see what happens. But we're developing a line in the sand. The lows of this bar. The next bar, you can see the lows are basically the same. I'll take it to 10-minute. You can see, here's the lows of this bar. Just going sideways, going sideways. Take it to the hourly. Here's this bar. Here's an inside bar. We'll go on 30-minute. It's going sideways. It starts to pick up a little bit. The volume's okay, all right? But we have a shelf that's forming here, going sideways here. Or you could do a downward sloping trend line if you wanted to. I'm just going to show you these things so that it helps you. You got a downward, that's a crummy line, ain't it? Let's fix that. There we go. I should use crayons. Here we go. So you got a downward sloping trend line, right? Or an upward sloping trend line right here. Again, we're down in the stock, okay? So we watch this line. It goes up on a pickup in volume, and you can say, well, man, you know what? There's an upward sloping trend line. I'd really hate to lose it. Here's the 10-minute chart, all right? And then right here, it starts to lose that. Look at the pickup in volume. I'll take it to 30-minute. Here's the 30-minute. Lost that trend line on a pickup in volume. That, to me, is a trigger to say, maybe take a little bit off. We don't want this to run away from us where we're getting our rear end kicked, okay? So, watch that. So it drops here just a little bit. A person could, if they want to, take some off, all right? For a loss. Finally, when it lost this neckline right in here, that was enough. Here's the hourly chart. When it started to drop on a pickup in volume, I said, that's enough. Here's the 10-minute chart grinding down. I took it off. Let's go back to the daily chart. Daily chart. Gaps down, meanders around, and I said, that's enough. Now, you could say to me, oh, maybe it's going to bounce back on Monday. Yeah, maybe it will, but maybe it won't. All I know is this was a big gap down bar. The tactic is this. When you get something like that, watch it on the 30-minute chart, watch it on the hourly chart, watch it on the 10-minute chart to see how it acts. Now I'm going to take this a step further. On the 30-minute chart, it gapped down and it closed near its highs. If this had gapped down, run up, and closed near its lows, I'm telling you, I'm really going to be cautious. If it had taken out the lows of that first 30-minute bar, boom, I'm taking my loss and be gone. That's the moral of the story. I want to show this again. The other thing that's important is there was an entry right here on a pickup in volume. There was an entry going across these tops on decent volume. What is another moral of the story? And it's this: buy right. The person who bought it up here got spanked. The person that bought it in here had a small loss, but nothing like up here. So buy right and manage accordingly. I just wanted to show you how you handle a gap down. You get a gap down, watch it on the 30-minute chart, watch it on the hourly chart, watch it on the 10-minute chart, and act accordingly. Never, ever let it just keep auguring down on you, because that can really wreck you financially and, I'll tell you, psychologically. And I thank you.